Good day. Ira Epstein with your weekend edition of your Metal Market Wrap-Up. And this wrap-up is for Friday, the 2nd of September, 2022. Happy Labor Day. You won't be seeing me again till Tuesday, but stay tuned. I have a special offer on my research for Labor Day. You'll see it at the end of this. Update in the metal markets. Okay, interesting. Big down day in the stock market. What the heck's going on? Well, the dollar down a bit. Currency markets mixed, but mostly higher. A lot of news out today. We have the jobs data. I won't bring it up here. It's in the other videos. You can see it there. To make a long story short, 315,000 new jobs. And we saw the participation rate go up nicely to about 62.4%. Basically, nearly 800,000 people joined the workforce, so eligible to work now. I think that's a low number. I go into it and tell people the reason why. In order to get these numbers, it's a survey that's done, and the government sends out certain forms and the employers fill them out. They had the lowest participation since 2006, but August is always a low participation. This one was really low, obviously. And it's the most likely month to get a revision up of all the months of the year. So why is it low? People go on vacation. Now, COVID has changed few things, but not the idea that you go on vacation with the kids, the last vacation, you do this, you do that, you're wrapping up your summer. I get it, you get it, we all know that. I'm in September in Chicago, right? So I'm already looking at the yard, what work do I have to do to wrap things up for the fall? So I'm already doing my planning. Well, people go away and they do these things. So I happen to think that come the October report, we're going to see a revision to the August report. That's my guess. I think they'll revise it up. We'll see if I'm right or wrong. It won't matter because the Fed's got its meeting, its FOMC meeting, well before then. So the next piece of the puzzle for the Fed is CPI. And if that's hot, well, they can get a little crazier. But the jobs data, the fact that more people want a job, it's anti-inflationary. You might get two people competing for one job instead of hoping that you get somebody that gives you a call, answers your ad. Maybe you get a couple. You don't have to be as giving as an employer. The more people that come to you to work, the less things you have to give. The fewer the people that come, the more things you have to do. In a monthly chart of gold, you are still caught in this sideways action. I've been pointing this out to you for a very long time, and you're caught in that. Don't get overly bearish down here is what the work is saying. On a weekly chart, you were down another 1.3%. The bias is down as you're under the 18-week moving average of closes. You can see how this chart has been falling all the way through. In order to negate the downtrend, prices have to get over 1804.90. Not doing that, you keep the market in a bearish phase. You just had a bearish crossover where the 18-week average in red got under the green. It happened about 4 weeks ago, as you can see, and the market has been dropping down. It's a bearish crossover. Support comes in, one of the support points, at 1670.80, the 200-day moving average of closes, and that's combined just above it with 1683.30, which is the Bollinger Band. That'll slip a little bit when we reopen. I think we reopen Sunday night. Probably get very close to that 200-day average. So that's where I think the pros are looking, hey, I don't think it's worth being short gold anymore on this break, and momentum has still been down. Gold-silver ratio, I've been telling you on the daily charts. People writing me, one guy writing me, a wise guy, Ira, do you know that the Vikings considered silver worth a fortune? I was reading that. I was laughing. So were tulips. They were considered worth thousands of dollars. So's crypto. It was just 70,000. It's 19. Need I keep going? I can give you the same talk. The simple fact of life is I made a point that when people tell me in fine jewelry it's silver, I start laughing. And my wife is with a big jewelry company. I laugh at her. And the reason it's a $17, $18 an ounce item. It's not $1,700 like gold. It's not near $2,000 like palladium. Those are precious metals. In the silver market, you're down to the lower Bollinger Band. It's a short cover area. Momentum down, bias down, not embedded. Copper, as long as China's bent on this road that they're going to keep shutting down cities, there is no number I want to own copper at right now. I don't know how serious this problem is going to become with them. It's already a headwind because country after country is raising interest rates, and the word is, our Fed Chair Powell said, you got to create pain. That means you got to reduce demand for goods. A lot of copper's in goods, and that reduces demand. Now you take out a big country like China in that demand cycle, it's a real problem. Should you eventually buy the free ports and all that? Well, there'll be a number. I don't know what it is just yet. In the platinum, what do you do when you get back down to a Bollinger Band? What does the market ask you to do each time you get there? Cover shorts. I am not saying because the market went up to go long. I wish I was that good of a trader. It is what has happened. I am screaming, I don't want to be short. Last, the dollar index. What do you do when you hit the upper band? Now I know why the dollar's got problem. That is the headwind the dollar's facing. It's ahead of itself. Other countries are going to get aggressive with their interest rates. Maybe traders are starting to say, maybe I should own a euro or this. As bad as it is, they're going to be going nutty with their rates and so on. It's hard to do, but as a chartist, there's some reasons here to be lightening your position up against that number. Can it latch on and run the number the way it did here? It absolutely could. So the dollar is a little different. I would not tell my clients to get out of everything. I think that that's what you watch. Hope you get an embedded reading. But if it starts backing off very much, dump it. Can I be any clearer? So as I told you, one of the things that I want to offer you is my Labor Day sale. 50 off for 4 days. You have a chance to buy it. 50 off on any of my research. Now, that does not include my enhanced Bollinger Band course, my charting course. We do specials every now and then on those. This is just for my morning subscriber video, the Spider ETF subscriber video, the combination of the two, and my full research. So $7.95 a month is cut in half. $8.95 a month for the Spider ETF, cut in half. Buy it for a year instead of $156 for the futures one, it's half of that. One shot at it. That's going to be it. So you got these 4 days. If you're getting serious about trading for the fall, why not do this? I put out 24 videos a month. And as you know, it takes a lot to put me out where I don't put out a video, a real lot. I think you'll find it worth your time, effort, and just maybe you get some trade ideas that make sense to you. I'm Ira Epstein. You have a great Labor Day. I will see you all Tuesday. Take care.